So now on to the final session, and we're going to overrun by around 10 to 15 minutes or so to finish off the session. But the final stream around liquidity and finance. George, is there another angle we can look at here? Perhaps portfolio securitization of a pool of MSME trade assets?
Well, yeah. I mean, I obviously think that is exactly the way forward. Solve the data problem with a digital solution in real time, and securitize them, put them into a portfolio together to unlock investment support and new dollars into the program, particularly DFI support, particularly multilateral support. But the only way that we can unlock that support and direct it into SMEs is through exactly this type of securitization, solving all of the informational problems that the investors have around proving the money's being used in the right way, and organizing the assets into an investable format, where it doesn't matter now that the DFIs can only give us 2-year money. They can give a perpetual guarantee for these portfolios never go away. They are perpetual, and the DFIs could very usefully use their balance sheets and their AAA ratings to underwrite a securitized portfolio of African MSME trade assets, and then investors who have much better priced short dollar liquidity, particularly in such a low interest environment, who are looking for a new asset class which has very low default rates and yet pays an African yield. That could be a marriage made in heaven, and solve the problem for the DFIs, allow additionality, and for them to actually use use their support and demonstrate their mandate in the developmental support, and also bring in new investor money, which could all be deployed into this very space to close the gap and in scale. I mean, that seems like a very good solution to what would otherwise be an intractable problem of data and evidence and processing of hundreds of thousands, millions of underlying trade transactions. That seems to be kind of the way forward.
Thanks, George. So, Chris, what are the likelihoods of regulators rolling back on capital requirements and LDG ratios on trade finance, knowing the inappropriate burdens and implications this has had on MSME access to trade finance?
Well, look, I'm an optimist, and I think I think there is a real opportunity. There's a sort of perfect storm of issues, isn't there? There's the trade finance gap, there's the COVID recovery, the need to drive SME growth. All of these things play into making the case to governments and regulators to improve the environment in which they're trading. And if we can't do it now, when are we going to do it? But I think there's some very sort of basic, simple priorities. This is not about, as I think Claire said, this is not about revolution. All we're saying is let's follow proper evidence-based or make evidence-based decision-making based on what we know is happening in the market, and there's plenty of that around. But there are simple things that we can do beyond just regulatory change. The use of exchanges. There's some interesting activities and initiatives going on in a place like India, where SMEs can sort of log in with their assets, and funders from all directions can come and fund those assets. And you know, why can't we do more of that type of activity? So I think it's about presenting it in the correct way. I think that's really, really important. It's got to come from not just banks, but on the finance community. It's got to come from the trade community at large as simple solutions. That's exactly what we're going to be taking into the UK Parliament in the next few months along those kind of lines. But I'm optimistic. I think we can do it. I think now's the moment, but we need to kind of mobilise ourselves and all be taking the case into our national governments.
You